there's still $1 trillion worth of excess savings out there that's keeping the consumer going.
That's right. We just got the consumer retail report, right? Sales report. And US retail sales beat expectations. Okay, beat expectations. The market is strong, right? Bidenomics, or if you want to call it, trickonomics. I don't know what you want to call it, but either way, the retail sales are going higher here. And on the month over month, it was actually lower. So it's not like inflation expectations are rising. It is just stronger than expected growth. Okay, Bidenomics, what do you want to call it? Doesn't matter. Fiscal policy, either way, the consumer still has $1 trillion of excess savings. Okay, that was revised up. They have a lot more savings than we actually thought, and we're seeing that play its way out. Does it continue for the rest of the year? I don't know. On a year-over-year basis, retail sales have been climbing for 3 months, right? So GDP is coming in stronger. We are expecting stronger GDP, and the market likes that. I think we're going to see the Santa Claus rally. And when you look at retail sales, what are you looking at? Motor vehicle sales, food and beverages, merchandise, food and drink services. They're still spending. Online is going to boom because of the holiday season. And this is the Santa Claus rally that we're talking about that could be ending in January, February, because the consumer is going to have to, pay their debts at that point. But they're going to spend for the holiday season, right? They're going to spend for the holiday season, and that is the expectation. Now, real quick, before we move on, there is some breaking news, right? And this just came out 4 minutes ago. Senior Hamas leader, who knows if it's true, we got to fact check it. The group is willing to release all the civilian hostages, foreigners, and Israelis if the strikes on Gaza stop. So that's big news, right? How did the market react to that? We'll come back to the macro. And if you're new to the channel, we go over the technicals, the macroeconomics, the psychology of the market, right? The psychology of the market and the Fed, right? What is the Fed saying? How do we interpret the Fed speak? How do we interpret the economy? How do we look at the technicals and look forward into what's coming? So right now the market actually pulled back. That's interesting. I thought we'd be moving higher. There could be some other news hitting the market, but I thought that was pretty significant. And we'll see how this goes forward. But the S&P is stuck here. We've been talking about this level. Okay, let's actually bring that here. Right, we've been talking about this level on the S&P. This is the 438.50 level. We almost closed the gap. If you're new, the gap is an area of it's an important level. The S&P gap down back September 20th. It gapped down, had a lot of weakness, came back up, broke out, and is trying to fill the gap. It could just fill the gap in reverse, right back down. I said yesterday on the video, literally, if we do not fill this gap, I mean, if you're looking to go short, you're gonna want to get short at the gap. We almost filled the gap. It might go lower, right? But if the whole geopolitical escalation start to ease a little bit, that could be very constructive for the market, right? So let's see that news as it pours in. This is, there's a lot of stuff going on right now, so we can't tell exactly through just technicals, through just the macro, through the fundamentals. By the way, we do the fundamentals too if you're new on the channel. Fundamentals, S&P earnings going higher, and that's what we're going to go over next. Let's get back to the news cycle. We look through the news cycle also, and let's see what we're seeing, what we're getting here, right? So first off, U.S. is easing sanctions because oil, really the geopolitical risk isn't really about, when it comes to the stock market, not the economy, isn't really so much about, oh my gosh, there's a war. Wars don't matter to the stock market unless it impacts one of the asset classes or impacts, some type of geopolitical or some type of risk off move, whether it's to the dollar or inflation goes higher, whatever it is. The Russian-Ukraine war caused oil to spike. That's the real risk here. It's not so much that there is a war, that it does just expand, that oil goes higher. So right now, U.S. is easing sanctions on Venezuela to get oil lower so they can increase the supply, right? Iran is already doing backdoor deals, but we know that's not going to work out. Saudi Arabia came out and said, the Saudi prince said, hey, we're going to make sure we stabilize oil prices near the end of the towards the end of the year. And we know that's going to be a deal that's going on with, it's going to be a deal obviously with the US because we don't want the economy to fall out of balance, right? And we got the biggest guns here. It's a lot of using the dollar as a weapon. And anyways, that's it. So what are we seeing? Peak dollar, right? Maybe not peak, but dollar is slowing down. The dollar is a big macro force, right? Everything is priced in dollars. if you're looking for the market to move higher, one of the tailwinds is a weak dollar. You want the dollar to roll over, right? 90-80% of the time, a weaker dollar, higher stocks. So right now we are seeing the dollar weaken, but it's still above a very important level. It's like 105.50, 106. That's a key level. If we stay above that, it's not bullish for the market, but if it moves sideways, the market can still move higher off of strong earnings. Rates are also near peak, except for today after this retail sales report that just came out. And let's jump over to that. After the sales report came out, we did see rates start to climb again. And this was actually much different than before. When it comes to rates, there's a curve, right? There's rates at the short end borrowing rates, 2-year rates, and then there's 10-year, and then there's 30-year, right? Mortgages are going to be at the 30-year. Payrolls are going to be at the 2-year. So 2-year rates actually started climbing, and we haven't seen this. This hasn't happened in the past couple weeks, right? Not the past year, but we haven't seen the 2-year actually break out. Now the 2-year is making new local highs. Okay, the 5-year also pushing up. The 10-year's been up, but the 10-year, it's at the high, so it's not breaking out again, although it had been breaking out earlier. So we got 10-year rates starting to break a little higher. 30-year rates are lagging. This is going to be good for mortgages if it slows. Now, it is very bullish, so maybe rates don't fall here. Maybe rates do keep climbing because economic growth is stronger, because the Fed can allow a pause if rates continue to climb, because the rates are doing the work for it. And how do we know that? We've heard that. Let's listen into what one of the Fed members said earlier in the past couple weeks.
The rise in yields actually does the Fed's job for it. Would you agree with that?
That is actually how it works. The bond market has tightened quite considerably, over about 36 basis points since we met in September. Well, that is equivalent to about a rate hike. So then the need to do tightening additionally is not there. If financial conditions are sufficiently tight, our work is not necessary because we don't need to boost them more.
Right. So the 10-year, right, this is the benchmark yield. This is the benchmark yield. If you're new here, you're a little confused, don't worry. We're going to have some courses coming out stay tuned. We're going to have courses coming out that help you to understand the bond market, the dollar, the macro forces with the technicals, with fundamentals, all that stuff. That's coming. I don't want to say soon because we don't know. I want it to be quality. Now, the dollar, right? The dollar is rolling over. This dollar has been driven by rate risk, right? Rates moving higher. But look the changing character we're seeing. This is why technicals are so important. You're seeing a changing character. Do I know the insider information? No, but all I got to do is look at the assets, what people are actually choosing to do, sell or buy. That's where your buying power is. You can say one thing politically all day, but what you choose to purchase, what you choose to put your money on, is where the sentiment actually is at, right? So the dollar is weakening while rates are rising. We haven't seen that yet. So this is a change of character, and it could be that there's people piling into either bonds or stocks or credit, right? So this is going to be interesting if that news is that news about the geopolitics is true. Now, the other macro force that's very important that we just talked about is oil. Look, the Saudi prince came out. Basically, Saudi Arabia said, hey, we're going to make sure that oil prices do not spike. We're going to stabilize oil prices. Going into the back half of the year, oil dropped. Okay, it's bouncing. Yeah, it's bouncing a little bit, but also we're easing sanctions on Venezuela. The U.S. is already pumping supply of oil at a high rate. This means gasoline prices are going to stay stable. They shouldn't rise. I know everybody's betting on the $150 oil, it's going higher, but those are just guesses, right? We want to actually track the data. Nothing puts us there yet. Nothing takes us there yet. Maybe if Iran jumps in, if Saudi Arabia somehow has to jump in, if we get Jordan, Lebanon, and Syria, and then China, and then Russia, maybe we'll have an issue, but we're not there yet. So stay tuned. Let's watch the actual data that we're getting. Look, nat gas, okay, it came right back down. Anyways, we're not going to get to nat gas. Let's get back to the actual report here. What we're seeing, right? What is the change of character? Where is this coming from? So, okay, U.S. easing sanctions on Venezuela, lower oil, right? Saudi Arabia stabilizing the oil market. Dollar near peak. We just saw that. Rates near peak. Maybe not. Long end could be peaking here, but let's not take a guess. The trend is still higher for rates. Shadow QE continues. What is shadow QE? Shadow QE is the Fed's reverse repo facility, right? This is really it's really quantitative easing in the background, right? Here's the S&P 500, and here's shadow QE. Look at it, it is exploding, right? It is exploding. These are so far we've had, this was $2.5 trillion, $2.5 trillion. Now we're at what? So we've already the reverse repo facility basically drained $1.5 trillion back into capital markets. And it's either going to buy up US Treasuries. Don't worry, we'll have courses on this. It's going to buy US Treasuries or it's going to buy stocks. So when we look at this backdrop, well, the 2 years moving up, the 3 years still stabilized. So maybe they're buying stocks. I don't know. We'll see. Either way, there is liquidity, even though you hear QT, we're tight, rates are high. Well, the rate cycle is pretty much over. The Fed has been signaling that they're done hiking rates for November. Maybe they do it again in December because we're going to get this Santa Claus rally because consumers are spending, because there's seasonal jobs, right? Seasonal employment, or maybe they're looking forward, right? Maybe they're looking forward to January and February and saying, hey, this growth will fall off a cliff to some degree. Okay. Next, JP Morgan raises U.S. Q3 real GDP growth forecast to 4.3 from 4.3 to 4.3% from, so they raised it about 0.8%. Okay, that's a pretty big raise. That's significant, right? And what does that tell you? When we talk about the third quarter, we're talking July, August, September, right? October, November, December is the fourth quarter. So July, so they're looking backwards and saying, hey, growth is better than expected. What does that lead to? Better than expected earnings. The earnings recession for S&P 500 is over. I'm ready for class. Tigger Media, what up? Shout out to you guys. So the earnings recession is over. This is why I'm bullish. End of the year rally. And I said on there, hey, one more push. Consumers are going to keep spending. There's $1 trillion of savings still in there. They still have jobs. There's going to be seasonal jobs. And then maybe we fall off a cliff. But even then, the White House, we're in a political, right? We're heading into an election cycle. Even then, you probably get, more stimulus in some shape or form or whatever. Oh, credit card debt's too high for these certain area of people. Well, let's give them some relief and put them on a program. That's probably coming. That's my guess. I give that a 75% chance that, Joe Biden or, maybe the shadow government, whoever it is controlling them, gives us more stimulus, right? To get those votes up. Now, the Fed, again, we believe, right? This is Fed Barkin. This is another Fed member. You always, if you're looking at the markets, if you're new, you always want to pay attention to what the Fed is saying. You don't believe what they say. You track all the information, you take all the data, you consolidate it, you compare it to everything else. And this, again, we'll have a course for this. And what are they saying? So far, they're signaling, they're telegraphing that they're going to pause here, that they're going to pause in November, but they're not telegraphing that they're going to, pause for the rest of the year. That's going to be data dependent. That's why we watch the inflation data. And right now, inflation is tame. That's why I'm still bullish. Inflation is tame. Rents are falling, right? Rent prices are falling. Housing might be up, but rents are falling. We're going to get to the new housing data, the economic activity when it comes to that. You always want to look at consumers. You want to look at, what are consumers doing? How are they behaving, right? How is economic activity? Because that leads GDP in general. And you also want to look at the housing market is part of economic activity. And you want to look at the employment report, right? What is the employment? We looked at that last week, and we'll get to that also. There's more jobs, seasonal jobs, jobless claims are still down. Nobody's, unemployment is not spiking, maybe in January, February of 2024 when the seasonality ends. Anyways, so what else do we have here? Yeah, inflation is tame. So premium stocks are probably going to catch a bid here. Who are the premium stocks that we've been talking about? And we'll move on, throw out your questions, concerns, right? Challenges, whatever it is. Let's do it, right? So who are the premium stocks? Also, pending Bitcoin ETF. You guys saw the big upside move on Bitcoin. There's a lot of interest there. And, Larry Fink has been talking about this, that there's a lot of interest in crypto. They're doing blockchain technology. JP Morgan already came out with their tokenization of their assets. And so Bitcoin's going to be part of that, traditional portfolio going forward. That's why Bitcoin exploded so much the other day, because, that's trillions and trillions of dollars. Now, it didn't happen. It was false news, right? It was fake news, fake media, whatever. Somebody got excited. Maybe they hacked, whatever. But at the end of the day, this is coming. This is coming, and the deadline is coming up soon, right? So you get that spike in Bitcoin. At the end of the day, who are the premium stocks that we're looking at here? Well, let's move to tech. Let's see what tech is looking like right now, right? Apple is in a strong flag pattern, okay? Amazon is in also a falling wedge. Amazon is due to move higher. AWS, not really retail, but AWS is going to be stronger than ever. They have their own AI. Google is trending higher. These are the stocks that can weather the storm. Meta looks great, a lot of advertising. And here's the thing about Meta. Why Meta will be, we'll go over Tesla. This is why Meta is going to be great. Because in general, when you talk about Meta, you're talking about advertising, right? Ad revenue. what do we have? An election cycle coming up. We have a war in Israel. There's going to be so many advertising bids, or so much advertising revenue and activity on Facebook, Instagram, right? You know how it goes. So Google, they're going to benefit from that. Microsoft, as always, great. Netflix might be trash. You know, there's nothing really good going on Netflix. And then Tesla's the real, you know, uncertainty. We don't know. But look at this wedge pattern. If you're familiar with it, this is, you know, part of the technicals. This is a very powerful wedge pattern. And with Ford, Stellantis, all these, I got removed. Oh shoot, I got kicked off. Who knows what I said? Either way, move to YouTube. Or I guess you guys are probably already on YouTube. Anyways, Tesla is due to break out or break down. It could break down, definitely. But here's the thing. Everybody's so negative. The sentiment for Tesla is very negative right now. And that's a good setup for a beat. They will not beat earnings significantly unless those price cuts translate into higher demand and more revenue. It's not likely, but the expectation is that guidance is higher. The expectation is that we actually guide higher going into the fourth quarter when people usually spend the most, right? Nvidia also due to move higher. Now that's a buying opportunity, big pullback on Nvidia, gap down, and it's also forming a wedge. You see the strongest stocks right now that are very speculative are forming wedge patterns, right? What are wedge patterns? They're basically human psychology. You know, they're the buyers and the sellers really fighting here, and if it's coming from the lows, there's a lot more pressure to the upside. So you have another wedge here on Nvidia that's starting to pull out, starting to turn out pretty well. Also, you have AMD came to that price target, came down to 102 is what we said. It's supporting the 102 level. This is probably where you want to buy, especially going into earnings season, right? Now, getting back to it, here's the other part of this. What gets stocks higher other than just earnings? Okay, you have earnings at 19 after hour. Yeah, I don't know what happened on there, Doifer. Anyways, it looks like I probably mentioned Tesla. Somebody jumped on there and banned me for saying, you know, Tesla's great. Or maybe the Middle Eastern conflict, who knows? Either way, the Middle East escalation could actually result in bond capitulation, right? So earnings are due to go higher. GDP is going higher. Oil is, you know, sideways. Hopefully that stays where it's at if you're bullish. And what else we see? What else are we seeing here? Well, if rates actually peak, and here's where people, if you're new, if you're familiar with this, you understand what's going on here. If you get rates peak, okay, 10-year rates, if you get these peak off of well, not these, if you get the bonds to bottom here finally, and look at all this craziness, right? Gap down, gap up, gap down. Bonds are wild right now. If the bond market stabilizes because of this, you know, because of this geopolitical risk, buy U.S. treasuries as a safe haven. Now rates come down. These are literally inverse to each other. So as bonds go higher, rates come down. You can look at the 10-year. 10 years should be peaking. The 30-year should be peaking. The 2-year is not TLT, so this is different. But you have the reverse repo facility coming in here buying up these. Now that's interesting. They eased today. I mean, they strengthened today, so we don't know exactly how that's going to play out. That was unexpected, but you have a lot of expectations. So let's figure out how that actually pulls in. The Joe Bibby, the Joe Bib, yeah. Maybe that's what it was. What did I say? Who knows? That's hilarious. Well, that's media for you. You can't even, you know, call stuff out. Either way, let's get back to it. Asymmetric arrest, right? So I think if rates peak here because of the crisis, or because, well, it's a crisis in Israel, not for the U.S. yet. If we send over boats and the actual war expands, we might actually get peak rates here. Okay, now that's going to cause the dollar. That should push the dollar higher because the dollar is usually a geopolitical risk-off, currency. Everybody gets into dollars when there's geopolitical risk. That's negative. But with those rates coming down, because we're at record levels, that could help the premium stocks, right? That's going to help crypto move higher in general because it's a risk-off event. Okay, that's what I think. I could be wrong there, but I do think if long rates come down, because crypto is a long duration asset, right? All the profits are into the future, right? Not all of crypto either. Most of it's trash. 98% of it's trash. If that does go higher, then, you know, we should see that capitulation. What is gold doing? Gold is, I don't trade gold. I don't like gold as an investment. I think it's inferior to Bitcoin. I think it's inferior to stocks. But gold is going to give you a signal, and gold is trying to make a move higher here. And gold moves higher for two reasons. Either it's geopolitical risk. It's not inflation. It hasn't been an inflation hedge. It's geopolitical risk, or the money printer turns on, right? Which we could see both of those actually come into play here. So let's see, what do we got here? Yeah, I don't know what happened there. That's interesting. Who knows what I said? Well, either way, we'll get this we'll get stuff moving over here. So we got Tesla moving up here at the wedge. We have earnings. We're gonna stream that live tomorrow. The earnings call. It's after hours. Yeah, it's tomorrow. It's tomorrow after hours, after the market. Again, expecting maybe lower margins, but we want to hear the bottoming of margins for that. Also, let's see. Okay. Chainlink is showing another opportunity. I actually want to get long Chainlink around this uptrend. I want to get long here. I want to add to my position at 650. I'll show that live also if we get down there. I'm actually going to be getting out of ETH to do that because I see a big upside move for Chainlink, a lot more opportunity going forward. So S&P 500, let's get into the technicals. What are we seeing here? Did we get a bounce here on the 30-minute chart? Oh, yes, we did. Yes, we did. We got the S&P bounce. Now, we had this cup and handle earlier, right? Cup, handle. We broke out of that cup and handle and we supported it. And by the way, this white line, this is the big uptrend. This was the bull market uptrend that started October of 2022. So we regained the uptrend. That's very positive. We're supporting now the actual technical level and we're moving higher, right? We're getting rejected. So between 438.50 and 432, that's a very strong level. There's a big battle going on here. And you know, what's going to keep us strong? What's going to keep us at that level? Qs look a little different. Okay, the Qs definitely could come down in earnings, which is a possibility, right? The Qs got to the top of that range, they pulled back, or we just come back to the range here, this uptrend right here. We could just be at this uptrend. So there's a lot of scenarios. Either way, I still think going into the end of the year, this is a really good setup so far. This is a really good setup. You need a black swan event to really push things off here. And I don't know if we're going to get that. Let's see if there's any other breaking news coming in here. That should be positive though if they are going to release the hostages. I mean, you can't really believe anything anyway. So, or that could escalate it if the strikes on Gaza slow and they're like, no, we're not going to slow the strikes because they could be just doing a false flag there. Who knows? Okay, cool. So yeah, this is IndieX. We're at the top of the trend. It does look bearish. It does look bearish. But if we do take a step back here, look at the actual technicals of the full index. The roaring, right? That big rally. Let me open this up. There we go. Okay, so this is the bull market trend. It was violated. So our bull market trend did get violated. We need to get back here, back above this level. I'm not going to say 15,651. That's too many numbers, but we do need to get back up here, right? That's where we need to get. Now, this is a good consolidation, a bull flag, because it's coming from the lows. If you're coming from the highs, it's a bear flag. This is a bull flag, and this is a nice setup. And I think in the intermediate, it's the same thing here. You're probably going to get IndieX or you know, NASDAQ. You're going to get it retest this what is this, 1480, this 1480 level, 880 levels, 14880 level. You're probably going to get a retest here. That's what I'm looking for, not to enter this, but to see the confirmation if we're going to get stocks continue. This is all dependent on earnings. Plus, banks are beating on top line, bottom line, and guidance going forward. They are signaling, Brian Moynihan, the Bank of America CEO, did signal that consumer spending should actually be slowing. And I think that's what got yields down a little bit. That consumer spending is going to be slowing, but it is going to be strong. It's hard because it's a year-on-year measurement. So it seems like when they say slowing, it's a negative that we're going into recession. But I think they're just saying the amount of spending isn't going to start moving higher. It's actually slowing down. And I believe that going into January, right? But the spending that we have seen and that we are seeing is going to roll into the end of the year. It's going to roll into these earnings for Q4. So this will be interesting. This will be very interesting to see how this plays out going forward. Now, the VIX, right? Let's look at our macro forces. The VIX is still below 20. As long as you stay below 20, and it is holding on here kind of high. So you don't like this, but this will probably remain as we get as the geopolitical uncertainty continues. So this is just geopolitical uncertainty, but we're under 20. That's pretty constructive there. When it comes to NASDAQ vol, it's a little more elevated than the S&P vol. Bond volatility, you don't want to see this go up. I'd say this is your big red flag here. Bond volatility still climbing, and it looks like it's about to, rip out. Boom. So if bond vol goes up, I mean, that is signaling it's going to be harder lending there. It's harder. Lending is going to tighten. This is lending tightening from the bond market, or less trust in the U.S. Treasury market, which is the debt market, right? Triple B spreads. This is credit risk. Credit risk is not moving higher. I guess you could say it bottomed here, but credit risk is not spiking. So you're not really getting equity credit risk. And that is a risk on signal that investors want to take a risk here. Let's see this put to call ratio. Let's see if the people are buying puts again. No, it peaked out. It looks like it peaked out here. This is what the inflation was. This inflation? What was this? I'm not sure what it was, but it peaked out. Should be rolling over. If we do get the rollover, that's going to be very bullish going forward. Okay, now the retail sales spike actually did cause us to spike for, where did we spike? We spiked in the XRT. So this is retail sales. Yeah, retail sales spiked, and we got the retail ETF actually moving up pretty strongly. Right, this is a big rip from the lows. Pretty big rip from the lows. Now, does it last? I don't know. I think this is a stock picker's market here. I don't think everybody's gonna be, I don't think every stock is gonna do well because rates are too high. If you don't have enough cash, you can't fund your debts, and consumers are gonna slow in some segments, right? Now, moving to the housing market really quick. The housing market, this is just more recession. So people that think inflation's coming back, no, it's in vehicles, it's in shelter. Shelter's rolling over. The only reason it didn't roll over faster and the last print was because of home lodging away from home, which is just hotels, Motel 6. You guys, I don't know why you guys are going to Motel 6, Holiday Inn, whatever it is. Slow it down there. But no, that'll roll over. Single family housing, though, is still in recession. The United States, basically the home builder sentiment is down. And this is for now, this is key. This is for single family homes. Okay, so basically, correct me if I'm wrong, single family homes. So they're not building, the inventories are low. There's not enough supply for single family homes. So those prices might be a little stickier. But when it comes to renting, those prices are decelerating because multifamily, they're building a lot of multifamily homes, right? We talk about this over and over and over. Multifamily is going up. There's that secular shift. And these guys, these home builders look 6 months ahead. 9 months ahead. They're looking 9 months ahead and saying, hey, are we positive about building? There's no positivity. They're looking at rates remaining higher, which means, not stocks, which means they're not going to build. Why build if something, there's no demand there? And what they're looking at primarily is going to be these 30-year rates. So that's not going to return until these 30-year rates start to slow, and they still look pretty elevated. So that's what we're staring at in the face. Let's see, what happened with that? Oh, that's Chevron. Okay, I'm trying to see if there's any more breaking news. Not yet. Not yet. Well, the U.S. economy is set to move higher at the end of the year. That's what we're staring at here. And here is your backdrop, right, for that. We'll go over this really quick. First of all, fourth quarter is the strongest season. We know that ISM new economic activity is recovering. The only recession is really in commercial real estate. And I know the delinquencies are going up. I hear that. I know the delinquencies are going up, but that's commercial real estate, right? That's going to hurt some regional banks, not all banks. We see bank earnings are actually higher. Their profit margins are actually up. So you're going to get a rolling recession in commercial real estate and housing probably for the next year, unless the Fed decides to cut rates, unless something really changes. But that's going to be in recession. That's okay. That keeps inflation lower in that segment. Well, you have technology stocks or the more cyclical stocks who can, make money in a high rate environment, and revenues, they're probably going to rip higher. All that liquidity starts to transition over. I think that's kind of what's going to happen here. Liquidity is also a big factor. China's a big factor. Japan's a big factor. China should be increasing global liquidity soon, right? They're gonna unleash liquidity into their market, and this is the liquidity picture. So let's take a look here, so you guys have a framework on how liquidity is moving. right? This is Fed net liquidity, right? So this is Fed net liquidity. So this is basically what the Fed is doing. And it did bottom in January, and then it looks like a bottom again in October at the bottom of the market. This is kind of where rates peaked in October. So we'll see how this plays out. But it does look like it did. You could draw like a wedge on it. It looked like it was going to break out, and then it didn't. It actually broke down. I think we were measuring right here. It broke down, but it came right back up. So we'll see if Fed net liquidity continues. This is global liquidity. So in general, if you're looking at the full globe, who's going to be more sensitive to global liquidity? Crypto. Global liquidity is, I think it's bottoming. It's not, it's the trend is going to be higher eventually. The US money supply stopped going down actually, and we expect that to move up going forward. And the reverse repo liquidity is coming in, but this thing should run out by, when it gets to the top, it's going to be running out by 2024 mid-year. So that's going to be a concern. And as long as we have oil peaking out here, I think we're going to be fine. I think, it's going to be a year-end rally, and we'll see if things change after that. But, that's pretty much all I got. You guys got any questions, any technicals you want me to go over in the intermediate? Just want to signal, hey, consumers are strong. Consumers spending is strong. Consumers are probably going to run out of money eventually. But the real thing here is that they still have $1 trillion of savings, right? They have $1 trillion of savings. They have seasonal jobs and excess. These are excess savings. Okay. I know the debt is high on the credit cards, but when you look at interest payments for, consumer interest payments versus disposable income, they're still doing well, better than pre-pandemic, right? So the thing is, they just have a lot of savings here. They still have a lot more spending, and that's going to go into the economy. And that's that. I don't see that slowing down. And you have fiscal policy coming in too. What is fiscal policy? Well, it's the Inflation Reduction Act, the CHIPS Act, and the who is it? Inflation Reduction. Oh yeah, infrastructure bill, right? So that doesn't seem like it's going to slow down anytime soon either. I mean, fourth quarter is where a lot of this is going to get spent. So I'll just keep your eye here on oil prices. The real question for the macro when it comes to the escalation of the Middle East, you want to see, does oil spike and does the dollar spike? Rates actually might come down on this one, but if the dollar spikes, it's going to be signaling a safe haven, right? A flight to safety. And if oil does spike, I mean, that's going to push the dollar up too, because it's another safe haven asset. And oil becomes the actual inflation. I really doubt it though at the time. We'll see how. I think the market's looking at earnings right now. Lynn Alden said there's a new rate of change and it could run out January 2024. Lynn Alden said there's a new rate of change. What do you mean? Are we talking about RRP? Or are we talking about the savings rate, Doifer? Savings rate or RRP? I'm guessing you're saying the savings rate, because RRP would be, or maybe you're talking about the reverse repo, because it is spiking pretty quickly. Yeah, what are we talking about there? Well, let's look at the S&P intraday for now. Man, that was bearish though. We got strength off of 432 and then big rejection at the highs. Big rejection at the highs. All right, let's see what Bespoke is talking about. Nothing. I just highlight that for an blah, blah, blah. We had 260,000 applications for approximately Oh, okay. So this is Goldman Sachs was talking about a lot of applications to work there. What does that have to do with anything? I think it just means there's a lot of job openings, a lot of interest there on RRP. Oh, okay. That makes sense. Okay, I see what you're saying. That makes sense because it is moving very quickly. There's only $1 trillion left in the RRP. Let's move this over. I mean, that's going to be a concern, right? There's only $1 trillion left. So if this runs out in the next 2 months, that's it. I mean, I still think the Fed's going to do something about it either way. Reverse repo. Yeah. It's the cash at the reverse repo. So the better way of looking at this is going to be, I mean, I look at it like this, but if this is the true way you look at it, right? The reverse repo facility is basically a facility where the Fed basically pays you to park your cash there, and money market funds, Schwab, BlackRock, all these big asset managers, they're basically money market funds too. They can park all the cash they have and collect whatever the Fed funds rate is, basically, right? It's probably a little differentials there, maybe a couple of basis points, 10, 20, 30 basis points. But either way, they're pretty much getting whatever the Fed hikes to. So it did peak out here, even though the Fed kept hiking, it peaked out here. You would think, well, this should go up until the Fed stops hiking. But it peaked out early because I think there was better opportunity. It started leaving and going into the stock market, right? And that's pretty much where stocks started to move higher. Once they, this is where stocks bottomed out and they started to move up. Well, they bottomed in October, but that was inflation. That was more liquidity coming in for the dollar. Actually, something broke in the global markets. It was the guild crisis, I believe, which was in over there in Europe, in the UK, right? The UK bond market broke, and there we saw U.S. dollar swaps explode. U.S. dollar stocks swaps explode. Central banks basically created more dollars, probably gave it to the UK or whoever else broke, and the market bottomed because you increase liquidity, and when you get increase in liquidity, then the dollar comes down. So correspondingly, the dollar peaked at the same moment. Now, the next one was, okay, well, the RP kept going up and then it peaked for who knows what reason. Maybe because fund managers needed to get long stocks. So they left the money market funds and they've been long ever since, or they started buying US treasuries. So that's probably the more, accurate thing is they're buying US treasuries. And we'll see if this continues. But either way, we're at 2.5 trillion. Now we're down to 1 trillion. So you only have $1 more trillion of RRP, left. But I think too, this money's going to turn around, and this money should turn around and go inside of, fiscal spending. So I think we get more. Dude, I do not see a recession here. No recession in my view, because either way, if this drains, okay, well, the treasury issuance basically slows down. It starts to speed up maybe, or it doesn't speed up, but it starts affecting the market and you get more spending. So the Fed might hike rates again in 2024. They could hike again another 25 basis points because the US government, right? Government policy basically is, hey, we're going to keep, stimulating. We're going to keep giving money. All right. Carbide, the horizontal trading range in the S&P is going to have a big breakout. Horizontal ranges are periods of low volatility and easier to set a stop loss and take profits. Yep. Are you referring to this little range here, 430? If we're talking about SPY, 432. I guess I'm going to call it 432. I know this is not the best angle. Let's go to futures. Now let's go to SPX. There we go. SPX. I think the range for SPX is turning out to be, you probably said it in the next one. Here's your gap. I think we're trading in this range right here for SPX. Short at the top of the range with a stop above it, long at the bottom of the range with the stop below it. When these stops are taken out, a large move will come. Yeah. And it looks like a lot of shorts stepped in there at that end of the range. Let's see if you had any other charts for us, carbides. Is this oh, that's IWM that you showed earlier. Support for the Qs. Okay, I see what you had. Well, the AMD setup does look pretty good. I mean, that was a very strong move. Look at this capitulation if we end here. This was the strongest candle, daily candle, when it comes to capitulation, so reversal move. I think that we've seen since what? October 5th? Right, so that you get the stair step. Stepping higher, stepping higher. Let's get rid of this. Was that the 50% retracement also? Yeah, it was about the 50% retracement at 102.50. Real strong pop for AMD. I mean, AMD looks nice. Stop under 102.50, or you could just put a stop under the wick, 101.68, if you want to get long there. Yeah, the AMD is really nice. I mean, I'm not a part of it yet. I'm not a part of it yet. It does have earnings October 31st. So you have earnings, what, how many days? What is this, a week out? Let's see if it just keeps moving here and supporting 102.50. AMD might just hit 102.50 multiple times. Why? Because the overall market is not bullish yet. AMD is going to, when the Qs start to move bullish, AMD will start moving, but that's just not the case yet. Whereas Tesla can move against the overall market. Not that AMD can't, but AMD doesn't have the catalysts to move against the overall market. NVIDIA does, right? NVIDIA does. Google probably does. Meta does, but I don't think AMD's strong enough to move against the overall market unless you get a better catalyst or a narrative. But hey, 102.50, that's the level, I would say. I think that's what we're staring at here for AMD. Let's look at a couple other stocks before we, what are we at? 42 minutes. Yeah, let's look at a couple other stocks. And again, let's, you can ask your questions. Damn it. Come on. Tesla support 254. Let's go. Hey, that was a strong retracement for Tesla. Gap down, made a new low right off the trend and just ripped, just absolutely ripped higher. But the overall market is kind of weak today. Big move for NVIDIA. I think people are dumping before earnings. So we could get the Qs really roll back down in, during earnings season. I think that's a great possibility before things get bought up again. Zscaler, ZM still looks like trash. Come on. Zoom, TSM, Teladoc. I don't even think none of these are worth looking at. Palantir is very strong. It has a catalyst. The war is a catalyst. Their AI technology for military is bar none. So they have a strong narrative. The price action is very hard to predict, but Palantir has a narrative. Okta, cybersecurity. These cybersecurity plays are supposed to be legit. I haven't really looked into them as much, but they should be legit. You got Teams here. This is just like a little basket of tech stuff. Twilio, really weak still, waiting for that Amazon contract to actually play out. Oracle back here. These are the AI / cloud computing plays. Open Door, oh my gosh, Open Door got crushed. But that's a pretty clear look. Open Door, if you're gonna get long Open Door, and it's getting crushed because the housing market is frozen. So once there's any inch of rates, of rates actually easing or the Fed pause, this could break out on a Fed pause November 1st, something like that. MicroStrategy, the Bitcoin proxy trade. Oh, that broke. Let's get rid of that. This is the Bitcoin proxy trade. So MicroStrategy is gearing up. A lot of potential there. This is the big level, though. I still think you want to get above, 350-ish? You want to get above 350. You want to hold that 350 level. You just don't know when the ETF's coming out, even though there was that fake news the other day. ENPH, let me see. What does that RSI look like? Wow. This doesn't look great because the RSI is grinding pretty. The RSI is exploding, but ENPH not making a big move. Went from 112 to 130. I know that is a big move, but It's at the top of the range. It could pull back. You want to see what happens. Yeah, look at that double top there. You got a clear double top. And those credits are just not hitting the market yet. I don't know. Let's go to the 30-minute, see what that double top looks like. I mean, this is a triple top. Look at this is clear resistance, 130. Call it 130, yeah. 130, 132. Clear resistance for ENPH. Solar, it's a solar name. The EMA is converging into consolidation. Okay, let's see. See if I could find the right one. I think, is it this one? Oh, okay, yeah, I found it. Broke Baller. What up, Broke Baller? I like the name Broke Baller. Let's see if we can pull this up. I think this is the one you're speaking of, right? Can I zoom in there? No, not really. Actually, let's just save the image, and then I'll open it up. It's a Discord. Well, I can't. Oh, there it is. Browser. Let's just do this. Here we go. All right. So this is what you had, carbides. Right here. Is it gonna let me zoom? There we go. Trading range. There we go. Nice. There's the neckline. So we're right on that neckline for S&P. This is your, I don't know what moving average you have. Musa. Oh, that's like an oil place, huh? So you have the head and shoulders, guys. Here's your head and shoulders. Boom, right? That's a bearish pattern. It broke down. It did play out. We're right back at the head and shoulders. So this is where I say you short here. If you want to get short, you get short at the gap, and it's going to reverse lower. But I think earnings, we could reverse lower too. Don't get me wrong. This is the range. There is no, clarity, but ultimately I think we end higher when I compare all the variables together. But we could come back down and retest this 200 moving average. I believe this is the 200 daily moving average. Breakaway gap support. Yeah, okay. Breakaway gap support. Nice. So this is kind of what we're looking at here. Range, neckline. Nice. Nice technicals. Oh, my bad. Broke Baller. What about EDR, the UFC stock? That's actually not a bad play since people are still spending, right? Whatever Taylor Swift touches, it seems like is pretty pretty strong. Oh, Endeavor. Yeah, that's what it's called, Endeavor. It looks like trash. I don't know much about the fundamentals of Endeavor. I mean, there's your falling wedge. I mean, channel. It is oversold. It should bounce here. But I don't know if it materially is a good bet. I know people love the UFC, but typically, what people love McDonald's. That's not a good bet. People love Walmart. Not a great bet. In this environment. This environment just might not be good for EDR stock. I mean, as an investment, hey, go ahead, grab some EDR, grab some Endeavor. But until you understand what are the margins expanding, what is the guidance going forward, what is the revenue, how much debt to equity do they have, there's a lot of stuff you want to look at here, and this tells me that investors are dumping the stock for a reason. I don't even know how big the market cap is, but it doesn't look great. The head and shoulders pattern is only a pending pattern, but we could also be in a huge left shoulder going into the head of a head and shoulders, and then a recession. The market is a fractal in nature. Come on, man. You're scrambling everybody's brains there. Too much technical talk. No, I'm just playing. I mean, it is pretty wild. You could even say that we're looking at this too. Shoulder, head, right? We come back down again, another shoulder, boom, breakout. So I think I think the most important thing is that we look at the range here. Which way do we break on the range? Because the bottom of this range, right? If you bring it down, the bottom of this range is also, actually, I'd put the bottom of the range right here. I'd say the bottom of the range also is the breakdown back to the 200 daily moving average. Yep. So we're going to break one way. This will be a good opportunity. I think investors don't mind buying down here into earnings. So that could happen. It's bearish. We're pretty bearish at the moment. When I say I'm bullish for an end year rally, I think we get a sharp pullback and then a break higher because the setup is really good unless you get something very bad hit. Musa. All right, let's see Musa. I remember shorting this back in the day a couple of years ago. Murphy USA. This is oil stock. Ooh, on fire. Man, these guys are just, these are the hedges. These are the hedges. Was it September? So this thing's been up in September, huh? These are your hedges right here. Very smart. I mean, it looks like it's overbought, but I mean, damn, it just keeps climbing. If it does make its way back, probably to the 50-day EMA. Let's do some technicals where the break is at. I'd say the break right now, I mean, it's pretty steep. It probably pulls back into earnings, I'm guessing, and then maybe continues higher. But I mean, these things just, I don't know. I don't have much to say about it. If anything, it probably can break down to this area, which more than likely it's just riding the 50-day. I think it's just riding the 50-day EMA. Or SMA, my bad, moving average, not EMA. That's your EMA. What else did we have? CrowdStrike. Oh yeah, that's one of the cyber plays. CrowdStrike riding that 50-day EMA also. So these are going to be in play. This is what the market is giving us, though. The market is saying, hey, there's a bull market in cybersecurity. It's going to need a lot of fiscal spend. This has nothing to do with consumers. So even if the consumer slows, don't care. It's a cyclical name. The cycle is security for whatever reasons, cyber warfare, blah, 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 behind the scenes. So yeah, I guess the cycle for these things are moving higher. Carbides, basically the entire drawdown from the most recent high in SPY is a whole left shoulder. Oh, okay. The head is the next rally, and the following right shoulder is the failure swing into a recession of 2025 to 2026. Are you looking like, oh, are you looking at this? Oh, damn, you might be pointing out, bro. I think you're pointing out like the big picture, aren't you? Looks like you're pointing out the big picture. Let's see. Am I wrong here? Okay, let's see what else you got. Or 2024, 2025. I'll tell you what I think is happening. That's just a huge guess, though. We could rally into a bull run, but that's what I mean with fractals, patterns inside patterns inside patterns. Okay, yeah, that's true. Okay, patterns and patterns and patterns. You're gonna have to work carbides. We're coming out with some on our website pretty soon here. It's almost fixed. We got some bugs with courses, man. You got to go build a course on how you trade because you have a lot of really solid technicals here. But I think what he's pointing out is, in general, we could be looking at this. We could be, see, how would you draw this here? Or you could draw it here, here, breakout. see, maybe it's here. This is a big head, right? Back to that level. See that level? And then boom. And then blah, blah, blah. And then back to 1,000. No, I'm just kidding. But yeah, I think that's what you're speaking of, right? And this is your breakout. 457 on the SPY. Do we get there by the end of the year? I think you need a couple things to happen here. Number one, earnings need to be guiding higher and look a bit better. Margins have to look better. You have to get better margins, profit margins, which means a lot of the S&P 500 companies are, they're able to utilize the money market funds to pay off their own debts. They're able to, collect enough cash to do that. Also, inflation being a little elevated helps these companies with their earnings. They're passing it over to the consumer. Number three, fiscal policy is going to kick in. Industrials move higher. Oil and gas companies, energy companies move higher. Semiconductors move higher because of the fiscal, the government spending. That's why I am so bullish, because government spending, I think people are underestimating how much of a boost that's going to do for capital markets. Not necessarily the economy right away, but capital markets, it's business, it's investment into these newer secular technologies that are going to increase productivity going forward. Number three, the manufacturing cycle is picking up. New orders are picking up. Manufacturing is picking up. China's credit impulse is picking up. Number four, if the Fed pauses and inflation gets under 3%, I think, investors are going to go ballistic, because that's what they want, lower inflation, and the Fed to be done with the hiking cycle. We're pretty much at pause at this point, and inflation's coming down, right? That's not even the issue at this point. I think it's really, the consumer spending falling off a cliff. That is the big problem there, because then it leads to what? Unemployment. So that's kind of what I think of the backdrop is. I think we're going higher until that ends. Fed Q, we have, Fed liquidity. If something breaks, everybody says, oh my God, something's going to break. The lag effects. Well, bro, we did get something breaking the banking crisis, right? This was it right here. March 6th, early March, something broke and the Fed stepped in and printed more money. Boom, went higher. So if something breaks, Fed's going to step in again. Oh, the consumer falls off a cliff. Let's say we go to all-time highs, right? And then the consumer falls off in February. And then we come down. And then all of a sudden, Joe Biden, boom, right? The Biden pump. Or you could call it, you don't have to call it the Biden pump. You could call it the, what do we say that he is? He's just a puppet, the puppet pump, right? Puppet pump. I don't know. In the end, I think a recession will come, because they always happen, but the recession will happen above from today's price. So not being in the market can be bad for investors. 100%. There's a couple scenarios there that, I think at the end of the day, the recession will come, but I think it's already here. I think we've been seeing a rolling recession, right? And this is what I'm going to talk about tomorrow. If you guys are familiar with Patrick David, he has a big channel, PBD podcast. He was talking about, he was talking yesterday about the economy and about why we haven't crashed. He called for a crash like earlier this year, and I was like, I don't think so. I don't see it, because investors' sentiment, they want to buy low. Everybody said the S&P would come down here, way down here, and that some people are even saying it'll come down the pre-pandemic this level. I was like, bro, no, it's not. It's people are greedy, and it's just not going to happen. Anyways, we moved higher, so he's calling for that. He's not calling for a recession. He's just saying this is why the market hasn't crashed, but is due for a crash, possibly in 2025, right? The cycle, it's all about policy, macroeconomics, and the vehicle, right? It's all about that. So what do I mean by that? And the macro forces, the dollar. If you do get this bull market rally at the end of the year, okay, consumers fall off, we kind of trickle around, maybe we retrace back down, and then Bidenomics steps in. Oh wait, employment is still pretty strong. The market's going to look forward into that. Production's picking up. Okay, we're okay here. And then Biden's like, hey, we're going to do relief on credit card debt defaults for vehicles, for students. If you've done X, Y, and Z, boom, market bids higher. And then the Fed is obviously cutting rates because inflation's down, market goes higher. And eventually you go into 2025 or November, and it's like, okay, the Fed now has to increase rates again, or they increase rates, or the Fed balance sheet, something breaks again, then you come back down a little bit. So either way, the path looks pretty solid. You need something really bad to happen. I don't see it happening. And everybody believes they're waiting for that big dump. It's just the Fed's going to step in. That's your answer. The Fed's going to step in. That is the answer to the recession. It happened in 2023, and the Fed stepped in. It's like waiting for the next housing crisis after '08. Yeah, bro, there's people still waiting from 2008 to get in. I mean, good luck, bro. Good luck. I mean, you're '08. I mean, you're way down here. You're waiting for the crash back down. People just have doom. They're just so negative, and it sucks to have that mindset. But the economy is optimistic. The Fed balance sheet is going to pick this thing up. Like, we didn't even fall. We had a full-blown look at this. We had a full-blown, this was the worst economic downturn of all time in the fastest period of time, and it shot right back up because we have something new that did not exist back here. It did not exist back here. What is this? QE. What do we mean? Fed balance sheet, money printer go burr, right? That didn't exist back here. We didn't do that. They just used rates. Now they have rates and money. And okay, I get the argument the government debt is too high, the payments are too high. Well, they're gonna decrease rates at some point. They're gonna overshoot inflation, they're gonna decrease rates, and if something breaks on the way, they're gonna print more money. They're gonna swallow up the government's debt. That's what's been going on here. They eat the debt of the government and they just put it on the Fed balance sheet. And then you get another recession cycle, you get another business cycle. Except for this time, this is the S&P 500. Who cares? When you're looking at stocks like Tesla, right? I mean, these things don't come back down ever. They make gigantic moves. Nvidia, they make gigantic moves. They do not come back down. Crypto is even worse. Crypto is not coming back down to save you. It's gone. Once it's gone, it's gone. You got to buy the lows, right? You got to buy the lows. So, I mean, that's what we're looking at here. Any other questions or technicals you guys want me to look at? Let me go take I'm going to take a small little break really quick, and I'll come back. And then if you have nothing, we'll end it there. Any questions, geopolitical questions, I'll double look to see if there's new news. Maybe something did come out. Let's see. It looks like Palestine leader. Okay, yeah, we have a little bit of news. We'll go over that. Okay, let's see what's going on with Hamas. This war is interesting. Like I said before, keep your eye on OLED. Oh man, OLED, bro. That's an old school play. OLED? Damn. That's an infrastructure play. Ooh. Now, what is OLED? Because this is a bearish pattern right here. This is a bear flag. Okay, this is a bear wedge. So, this is a bear wedge. Sell. This is a bear wedge, man. Against the 200. I mean, if you break out, you break out. Yeah, that breakout is above 165, right? 165 is your level. That's going to be the pretty much the blow off top there, 165. You want to hold it though, right? Not just one big move, but if it holds 165, then that's going to be pretty solid. 165 for OLED. But okay, yeah, I see the past. But in past history, it looks like OLED, when it did have these bearish patterns, it still breaks out. So it could still break out regardless of that pattern. Just looking at this type of price action. But this was 2020. I don't know if you can compare that. Let's go back here. 50-day. Let's move to the daily chart. It's a definitely different type of price action. I still think it looks kind of bearish. It could pull back in that 200. But it is grinding. See where that EMA is at. Yeah, I would say it's probably going to break down. There's a gap to fill down here at 140 if it breaks down. So yeah, you got a gap down here at 140. Bearish pattern. There'd have to be a lot of demand, right, for those screens. This is more of a fundamental play. I would want to see the fundamentals in it. That's definitely what I'd want to do. Okay, so, and then, yeah, let me know if there's anything else, Doifer. OLED, that's an interesting one. I haven't seen that for a while. Our rate's still climbing to end the day. Okay, we got a little bit of capitulation there. Dollar. The dollar's bouncing on 106. I want to see that freaking weakness. Let's go. Oops. I want to see the weakness on the dollar. More weakness under 105.50. That'll be great. But who knows? Who knows? Hamas leader calls on Palestine's people to get out and confront the occupation and the settlers. What does that even mean? Palestinian Hamas leader Haniyeh, bro, I can't even say that. Haniyeh calls on all Arabs, Muslims to stage protest against Israel. Maybe this is starting to change a bit. Maybe it is starting to change. Let's see if there's anything else that we're missing here. And Biden should be over there also right now. See if there's any like live news. Oh, we got some earnings stuff coming in, but we don't care. Israel Hamas war.
Friends would walk up to me and just be like, their plan. But if they were to try and escalate or in some way further what's already been done, then I think they have to understand there will be a response. It needs to be a swift one, and it shouldn't be just the United States. It should be all of our allies.
Not only in the region, but around the world.
But that means U.S. military involvement?
Well, I think I think you have to, I don't think you take any option off the table. I think you have to be prepared to respond to what is a clear provocation and, you know, not only terrible loss of life for Israel, but also, as has already been pointed out, it doesn't stop at Israel. I mean, Iran, we are the next target, and I think people need to understand this has national security implications, not just for Israel in that region, but for the United States.
Over here.
You talked about the destabilizing policies of the Islamic Republic in the region and their support for terrorism. Over a year ago, after a woman was killed in Iran by the morality police, the people of Iran took to the streets.
The U.S. military open to, hold on.
And lots of people.
The U.S. military opened to drafting contingency plans with Japan, South Korea. Dang, I thought they were going to say drafting U.S. citizens. No, I'm just playing. But open to drafting contingency plans. Bro, can't talk. With Japan, South Korea. Uh-oh. This might be escalating, or it could just be talk. I mean, I think the rhetoric's going to escalate for sure. The question is, are we going to get, hard power, not soft power? Hamas says hundreds killed in hospital airstrike. Damn. Why are they saying Hamas though? Wouldn't it be Palestinians? Oh, Palestinian president cancels meeting with Biden. Uh-oh. Bruh. Doesn't look great. We'll see how that dollar breaks out. Come on, is there more? Like a crackhead over here looking for news. Dang, that so it got canceled, huh?
Do you guys agree with Senator Graham that the United States should directly
Lindsay,
strike
you
Iran
wanna-
if Hezbollah does get involved in Israel? And what is that?
Gaza hospital explosion update. The explosion happened due to accidental failure during launch of
Well, I mean, I
Hamas
think
rocket. Bro,
don't mind on these issues, and there isn't anybody who's a greater
see, you never know what they're actually saying here. So this is Tom Nash. He's saying that the Gaza hospital explosion was due to a malfunctioning Hamas rocket. The IDF had no operations near the hospital. The entire Hamas HQ is under the Shifa hospital in Gaza, and the IDF doesn't attack it. Don't be fooled. So, ooh, that was interesting. Accidental. Right, exactly. Dude, that's jacked up, bro. That's jacked up. Blowing up their own hospital. I mean, who knows what the truth is, but if that's the truth, that they blew up their own hospital just to make it look like Israel, to rally the Arabs, bruh. Man, that's messed up. Oh, okay, here it is. The verdict is in. Proof that this was a Hamas attack, a Hamas rocket. I'm just looking at this stuff. I don't know if I could show this on YouTube. I guess they have evidence that it was in Israel. They better be videotaping. Everybody got their iPhones. Oh yeah, that was a Hamas rocket. Oh, bro. Okay, yeah, we'll see this. Bro, that's messed up. Yeah, that ain't no. That's definitely not a trick there. I mean, not a trick. That's definitely not true. The fog of war is something that I am familiar with, but in war, a lot of atrocities happen and a lot of stuff is swept under the rug. Yeah, 100%. 100%, bro. This is it. See that rocket get shot? So it looks like they try to stage their own. They try to false flag. Dang, that sucks. They need Palantir. 30 to 40% of Hamas rockets misfire and land short in the Gaza Strip. Bro, somebody needs to send this to the Saudis or the other Arab nations to show like these fools are blowing themselves up and their own people to make it look, to stage something. And heck no. Get rid of these dudes, not the Palestinians. I mean, the poor Palestinian people. That's messed up. Anything new, or is this the Treasury yields rise as hot data fuels Fed bets? Bro, we already know that. All right, well, I think that's all we got, man. We'll end it right there. Again, I appreciate you guys, as always, jumping on the channel. Make sure you guys eat healthy today. Get your workout in if you haven't already. Get enough sleep. Enjoy your day. Stay blessed. And we'll stay up with the war. If there's anything new, let me know tomorrow that I miss. Tomorrow I'm gonna do that Patrick Bit David stream with somebody else, and we're gonna I'm gonna actually play his clip. Maybe we'll get some more people, but there's a lot of people bearish. Play his clip, disprove everything, all the stuff you've heard. There's a lot of nuanced data that's coming into the market, a lot of nuance. So we're going to dispel the nuance. Come on here with questions, comments, and more data too that I might miss. You guys are together way smarter than me. So come with your data, your technicals, whatever it is. And yeah, you guys stay blessed, man. Peace out. Have a good night.